Today I want to share with you 3 questions that wealthy individuals, high net worth individuals, will ask that everyone else does not. And my reason for sharing this with you is actually a new study that just came out from Plymouth Rock, which kind of highlights the differences in what's important to different demographics of homeowners. And what was blaringly obvious to me was something that we found in our office here at Rogue Risk, because we work with the full spectrum of homeowners. We have individuals have home insurance values of $2 million and above, all the way down to people who own mobile homes, because good coverage, good service, caring, shouldn't matter how big or expensive your home is. But what's interesting is the individuals who own these different types of properties approach their homeowners insurance in different ways. And I thought it might be interesting to you to know that this study lines up with what we found. So the 3 things that often are most important, and where I get questions from the wealthiest individuals who do business with our agency, have to do with the financial strength of the carrier, their claims handling ability, and finally, their liability. And so what are these 3 things and why do they ask about them? First is the financial strength of a carrier. Why would you even care? There is an assumption that if you purchase insurance from a carrier, that carrier is just always going to be there, and that if something happens, you're always going to be protected. That's not necessarily the case. Now, if you're purchasing, depends on what state you're buying homeowners insurance in. If our headquarters for Rogue Risk is in New York, so if you purchase homeowners insurance in New York, there is a backstop that the state has if a company were to dissolve. But that's not really why financial strength is the most important, because the size of your homeowners insurance policy, even if you're some of the wealthiest individuals in the world, most carriers are still going to be able to cover that even if they're having financial problems. The bigger issue when it comes to financial strength is ultimately pricing variability, which means if someone, their pricing may be here one year, up here the next, maybe it comes back down, then it shoots back up. That's not what you want to be dealing with, right? Because now in order to keep the best price, you're constantly switching coverages, constantly switching carriers. It's not good. And ultimately, our high net worth individuals who do business with us, the financial security and stability of a carrier is very important because they don't want to deal with that. And they know that it's an issue. And what I'm saying to anyone who isn't necessarily purchasing a high net worth policy is it's okay for you to care about that too, because you're impacted the same way they are in terms of pricing fluctuations. So just consider that. Number 2, claims. How are claims handled? If you go with cheap, fast, and easy digital online carrier that was started 4 years ago, and it's fine if you choose them, but understand that they're most likely outsourcing their claims. And if you outsource the claims, it means you're getting an independent contractor who could give 2 flying craps about you or your home or the damage done to your home when they come out to adjust it. Where, in contrast, if you're dealing with a carrier who has superior claims handling, say a Hanover Insurance or a Chubb, or if you're in New York Central Mutual, you're dealing with a company that has their own claims adjusters who care, who are responsible, who are held accountable for their decisions, who are looking to make you whole, who are helping you. Now, some people go, Ryan, that's BS. Carriers don't care. That is wholly untrue. There are absolutely, positively insurance carriers that dedicate what they do to helping their policyholders be financially brought back whole after a loss. And then there are carriers that don't really prioritize that. It's my job to make sure you're put with the ones that do, if that's something you care about. So think about claims, big thing. And the last one is liability. I actually have another video where I go deep on this one. I'll put it right here. But the long and short on that is liability is where you can have your largest risk. You can max out. You say your home is worth $300,000 to replace, right? It would cost $300 to replace your home. You're maxing out a $300,000 loss if that home comes all the way to the ground. Well, that's a big loss, don't get me wrong. But if someone dies in your backyard because they leap your fence and they drown in your pool when you're not home, you're on the hook for the entire lawsuit that's going to be filed against you on what's called an attractive nuisance in a pool, a trampoline, a swing set, anything like that. You're going to be held responsible. State laws vary, but particularly in the Northeast, a lot of the states are similar. You're going to be held responsible for that death. That lawsuit is coming against you, and your homeowners will pick it up to the max that you have liability. So I find that my high net worth clients, the wealthier clients I have, they're always interested in maxing out their liability. Liability is super cheap versus the coverage you get. So consider that, think about it. These are the questions that I get. But none of these things are things that anyone who doesn't have a high net worth policy, they're not things that you shouldn't think about either, or can't think about, or can't afford. These aren't things that necessarily make the policies more expensive, which I think is interesting. So if this is the kind of relationship that you want, give us a call, 518-960-6600. Go rogue at roguerisk.com if you want to email us. You can visit us at roguerisk.com, or I'm sure there's a link or form somewhere around this video that you can contact us, whichever way you choose. We look forward to doing business with you.